Welcome to the 17th episode of Dividend Investing Insights, your one stop for all things dividend investing. Join us as we explore high yield shares, dividend growth strategies, and portfolio management techniques to maximize your investment returns. Subscribe now and take control of your financial future with the power of dividends. In the episode today, we'll continue to look at the portfolio that we have built and see as to how it has performed in the past week. However, like always, we'll start with the performance of the markets in the last 1 week. S&P 500 fell by 138 points to end at 5,870 points. NASDAQ 2 fell by a large 675 points or 3.49%. And here locally in Australia, NASDAQ fell by only 9 points to end at 8,285 points. Anyway, as I have said, stock markets will always go up and down all the time. However, you as an investor should have a portfolio that is diverse, that is fundamentally strong, so that your investments can pay the dividend now and in the years to come. Now, going to our portfolio, now a few weeks ago, we had started to build a dividend portfolio. The first purchase that we had made was KDP. We had bought 50 stocks at 37.46 for an investment of $1,873. Then we bought JP Morgan Chase. We bought 10 shares at $210.5 each share. Then we bought AT&T. We bought 100 shares at 21.91. Then we bought CVS Cell, 30 shares at 60.34. And last, we bought Unilever PLC, 33 shares at $61.32 each share for a total investment of $10,002.76. And that is what we had set out to be. Now, if I look at some of the characteristics of this portfolio, first and foremost, this is diversified. When we look at KDP, KDP is beverages, JP Morgan is a bank, AT&T is telecom, CVS Health is healthcare and pharmacy, Unilever PLC is FMCG. So this is diversified. So in the event of any specific industry or market segment going down, the others can support it. The second thing is that these companies are fundamentally strong. We had looked at their revenue profile. We have looked at their financial profit profile. These companies have a positive cash flow. They are fundamentally strong. Importantly, all of them have a low recession impact. So in the event of recession, people will still use banks. People will still have beverages. They may slow down. However, beverages they will still have. They'll still use telecom. They will still use pharmaceuticals. They will still use FMCG products. The luxuries will go down. Airlines will go down. Hotel stay might go down. However, these things would stay and people will continue to consume these services. One more thing that we took was when we built this portfolio that these companies were paying an immediate dividend. And that was a criteria we had set out so that we have some return immediately as we make a purchase. So this is what the portfolio we had. Let's look at the performance as to how this portfolio has been doing in the recent past that we have been tracking. So again, looking at KDP as of this recording has a price of 32.88 for an investment of $1,640. JP Morgan Chase has grown significantly since we purchased, currently at 245.31 for an investment of $2,453.1. AT&T also has grown from 21.91 to 22.68 for an investment of 2,268. CVS Health, on the other hand, has fallen from 60 to 53. It's an investment currently of 1,595. Unilever PLC2 has fallen from 61 to 47 to end at 1,894, which makes it a total investment of 9,794. However, that's not all. We've had dividends of $71, which is cash in hand. We may look to reinvest it or see as to how do we want to consume it, but that's another return that this portfolio has given us, which is a total portfolio value of 9,865. So, well, while it is less than $10,002, however, these companies are strong. And as you will see in the coming few weeks, the portfolio will grow and go well past $10,000. I am thinking that this has the potential to give a return of at least 10 to 12% per annum at a minimum, if not more. So let's look at how we are progressing on a week-to-week basis. So if you look at it, the first week where we tracked the portfolio, we were at 9,850. It went up to something like 9,900 in the last 1 week due to some macro. While Bitcoin has been growing very rapidly in the past few weeks, currently at 90,000. However, the stock market has not been performing all that well, which we saw when we looked at the market performance, which is probably a reason why our portfolio has also fallen down in the same ratio. But as the markets go up, this portfolio will also go up. But we'll continue to track it as we go forward and see how our market performs. But like always, one more thing before, what are the upcoming dividends that we have? We have Unilever PLC dividend that's coming up on 6th of December, which will be paying out 47.55 cents per share. That's another dividend that's coming our way. And we continue to track the dividends that are coming our way. Last but not the least, as we end, putting up the dividend investing checklist again. Use it to make your investments. Quickly going through the checklist. Do you understand the company's business? What is the dividend and the dividend yield for the current year? What's the average dividend for the past 5 years? What is the payout ratio? What is the price to earnings ratio? What is the price to book ratio? Does the company have year-on-year revenue growth? Does the company have year-on-year profit growth? Does the company have positive cash flow? Well, that's the end of the episode today. Use the checklist and look forward to meeting you in another episode of Dividend Investing Insights.